Greetings, traders. This is your installment of the post-market video. It's Thursday, October 6, 2011. My name's Des Woodruff, Senior Analyst and potentially your future mentor. The markets rally 3 days in a row. Dow up 1.7%, 1.8% on the S&P, 1.9% on the Nasdaq, and the Russell's up 2.4%. The banks leading the charge, giving support and validity to this market move. Gold up 0.65%. The US dollar down 0.63% and dropping, folks. And that should be bullish for the markets. The USO, the crude oil, up 3.7%. So crude oil is on a major rebound. Transportation index yet again giving support to the Dow. So here we are looking at the markets. Let me first say I am doing a live teaching training session tonight. All you do is go to the website, click on calendar, and get registered. You have to register to get in. And when you register, if you can't make it, so be it. If whoever does register will in fact get a recording of tonight's webinar. Now, the webinar will be on technical analysis, the basics and 101s of technical analysis, and I'm going to be sharing with you some things right now to wet your whistle. We have this big descending triangle, the big descending triangle. We are choppy, 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 break. We did break with volume. This was a major bearish signal to sell, 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 sell. And I went short. I was short up here going down, 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 down. Next candlestick, boom, we went way down. I mean, look at this. Way down, down. Here, short. Then all of a sudden we rally back. So all of us are covering shorts. Next day, this was yesterday, boom, again. And then today, a third day, boom. See, today we were watching for this area 1154. We hung up 1154 forever. At the end of today, we come rallying past that. We stall at the 20 falling 20-day moving average, and we close yet above that. Now, let me show you something on the Nasdaq. The Nasdaq, we have this big descending triangle, the blue lines here, descending triangle. You can go to my chart school there on the website and read all about these formations. Big descending triangle, but we haven't broke down yet. We rallied back. We also had a bear flag drop, these red lines, bear flag, and then we broke down, started to break down in the descending triangle. However, we rallied back. Now we're coming back to the 20-day moving average acting as resistance. We have the 50-day moving average acting as resistance. So both those are simple. And we have this lower trend line coming higher. We have support, support, and resistance. If you wonder if those lines are right, absolutely. See the support, support, and resistance. This is a more elevated way of drawing trend lines. People say, oh, wow, you're cutting off shadows and bodies. Yes, it's an advanced way of learning to draw these so you know where true resistance and support is located. So, as far as the technicals are concerned, we have a significant area of resistance that's knocking at the door. If I go here to the Dow to take a look at this, the Dow, we have almost a double bottom, a rally higher above the 20-day moving average, but still we have a lot of resistance to come up. Now, let me show you something that's very few people know about. It's called the three white soldiers formation. Now, a three white soldiers formation is the most potent after significant choppiness. That's what we have here. And after a downtrend. And you see that we have a lower high and a lower low. Right here, we are heading south. So, with that said, we have the makings of a perfect, oh boy, fertile ground for three white soldiers. They are rare. It's about like finding a $5 bill floating out on the street. But when you get them, they can be very potent to the upside. Now, what is a three white soldier? It's when you have these three bodies similar in size, but the second candlestick that pops up after a big down leg, okay, the second one, it opens above the mid part of this body, which it does. It opens actually at the top of the body. If you get a third candle that does the same thing with little to no upper shadow, especially in candle number 2, then you have what's called a three white soldier. If you have a three white soldier formation, its effectiveness is way up there on the food chain. I mean, the chances of this breaking out right now is pretty good. on the oscillator, on the MACD, the histogram, we do have a nice positive tick on the histogram. Now we're still sub-zero. We need to get above the zero line. I think if we do break out here, we will go above the zero line. So right now my sentiment, which a few days ago was as bearish as you could get, is now turning more bullish. Now technically we're still inside the confines of this choppiness, so we are in consolidation. So you got to be very careful here not to jump the gun. However, if we do break out, that's going to be pretty bullish. If I go here to a weekly chart, you can see that we had this big base, and we broke down early this week. Everybody and their brother was short. All the institutions, their stop losses were starting to trigger 1100 or below. But then you had the bulls run back in saying this is a great time to buy. So buyers started coming in. All those shorts started covering. So you have the bears buying and the bulls buying, sending this market straight back up. The 200-week moving average right now, as far as the weekend is concerned, we are above that. Now tomorrow morning we have news coming out of the unemployment rate. The unemployment rate was 9.2. Last month we had a tick down to 9.1, which was good. The question is, what will the pre-market news tomorrow on the unemployment rate bring to us? Now, anything can happen. So what you want to do is wait for that news to break and to make judgment calls early in the morning. So we will see at the market open or near the market open what the markets will have in store for us. If we start to go bullish, I certainly don't want to have any shorts taking place. However, if the markets start bleeding out, then we still have a chance to be bearish in this market. However, those chances are diminishing as I speak. So, to Steve Jobs, he's gotten a lot of recognition here, and boy, and rightfully so, with the technology he's brought to the markets. And I think it's only right to bring Apple into the mix here. We had this nice bull flag, rallied, bear bull pullback, we rallied. Today, Apple had dropped. Oh, that's on a weekly chart. Let me get to the daily. We have opened up. We had a big drop, but we have higher high, higher low, 50-day moving average acting as resistance. Now, if you want to join me tonight for the free webinar, it's a 30-minute, very fast pace of technical analysis 101. After that, we'll be talking a little bit about some mentoring sessions coming up soon. And if you want to join us, feel free to do so. If you want the recording, feel free to register. Take care and very safe trading to you. We will see you in the chat rooms tomorrow.